You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it's time to rock out once again with the Option Block. It's time to kick off our broadcast week here on the Options Insider Radio Network. My name is Mark Longo. I will be your guide, your host, your maitre d' here for your table side here at the old OIRN. You know, we've liked recently to kind of kick things off, get the blood pumping with some fun, action-packed 80s television themes. So we're going to mix it up today. We have a new theme submitted this time by Peter Lakwinitz. He says, I thought this would put a smile on your faces the way it does mine. I love the show. It's in my weekly routine every Monday and Thursday. Well, thank you for that, Peter. Thank you for your submission. Clearly, a lot of you guys like this part of the show. I think you guys really just like stumping the rock lobster. Maybe there's a little bit of fun for that too. So without further ado, let's see what we have in store for us this week as we kick off our broadcast week with a little bit of the old Name That Tune.
Thank you for being a friend. Travel down the road and back again. Your heart is true. You're a pal and a confidant. And if you threw a party, invited everyone you knew, you would see the biggest gift would be from me, and the card attached would say thank you for being a friend.
All right, there we go. A little bit of a change of the pace. We've been doing very action-heavy shows of late, like Airwolf and Miami Vice and Magnum PI, which are fun to kind of get us in, you know, the blood is pumping kind of mood to kick off our broadcast and indeed our trading week. Going a little bit different this time. And let's see, let's start in the land of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital. I go to him first, listeners, because he's pretty much been a dismal failure at this game. In fact, he requested one show. He said, could we please do Magnum PI? I know that show. And we did that show last week, and he wasn't on the episode, so he missed perhaps his one chance of all time to get one of these right. So I bought him a little time. I'm going to give him a chance to go first. Mr. Rock Lobster, A, welcome back to the program, and B, can you finally name that tune, sir? Name that show.
It is good to be back to the program. I don't know where I'm thinking of this, because I don't think I saw the show more than once. I'm going to say, what's the show with Valerie Bertinelli in it? One Day at a Time?
I think that is the show, but that is not it, unfortunately. But that is the show with Valerie Bertinelli. So you at least got that right, I suppose. Maybe we'll add that into the rotation down the road. How about that, to give you another chance at the bats? But so far you're 0 and many here. I could go to Uncle Mike next, but he's way in the lead in this game. So instead, let's go out to the NASDAQ hot seat, where we are joined today by Mr. Luke RAHBARI, the CEO of Equity Armor Investments. Luke, A, welcome. You've been on the network before, but welcome, of course, to the Option Block program. And then B, can you name that tune, sir?
Well, thank you for having me back. And I thought I was close, but I fell asleep in the middle of it. Let's see. Golden Girls.
Wow, well done. There you go. You're 1 for 1 here on the show. Yeah, that's an easier one. Yes, that's it. That is it. I gave you a chance to go first, Mr. Rock Lobster, and yet you dropped the ball yet again.
I've even seen that show.
And yet, the music is iconic. There you go. So you clearly got it. Either that or you had Shazam at the ready. Either way, it worked out for you. Well done, Mr. Luke. And last but not least, we are joined by a guy who I know he knew this one, because if he could pull Airwolf out of his back pocket, then he certainly knows this one. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, A, welcome back to the program, and B, could you have named that tune, sir?
Great to be here. Yeah, that one I thought was kind of easy. I mean, after all, they were the Golden Girls. They were every boy's crush back in the 80s. I mean, what teenage boys wouldn't watch the Golden Girls? I mean,
who didn't love Sophia? Yes.
Estelle Getty and Maude and whatever. I don't know.
That's both surprising and disturbing on several levels, Uncle Mike. But well done, nonetheless. All right, let's keep on rolling. That was a fun one. Who sent that in? That was Peter. Well done, Peter. Tried to give the Rock Lobster a softball, and he swings and misses again as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the Trading Block, the portion of the show we break down what the heck is trading, what is going on out there, and spoiler alert, a whole lot of red on the screen today. The market started off with a little bit of red on the screen, and it's grown increasingly darker and increasingly more red as the session has gone on. Coming into the start of the show here now, we're seeing most of the major indices right around 2.5%, if not more. The S&P is pretty much right at that level, off nearly 2.5%. NASDAQ, a bit of a laggard, only off about 2.33%, a comparatively meager 2.33%. The Dow leading the charge to the dark side, off nearly 3%. That means our vol's getting a bit of a lift here to come into the show. Coming into showtime, we saw VIX cash at about a 32 even, puts it up almost 4 handles, about 3 3/4 handles from where it was this time last show. Let's see if it's still a little bit north of 32 right now, about 32.15 or so. We saw VVIX coming in to start the show at about 127.5. That puts it up over 12 handles, 12.5 handles. So yes, spoiler alert, vol is moving. And it's moving quite a bit. You know, used to use 120 as that nice kind of upside barometer for vol is getting pretty frothy if it hits that 120 level. Well, we are north of it yet again, listeners, and substantially so. VXX, a.k.a. the vol ETP you guys all love to fade. Not feeling the fade this week. 23.6 coming into showtime, puts it up almost 1.5 handles from this time last show. And our old friend there, VOLQ, a.k.a. the at-the-money volatility of the NASDAQ 100 options, threatening a 35. coming into showtime. It was about 34 3/4 when we kicked off the show. That puts it up about 2 1/4 handles from this time last show. So a lot of vol to parse. Luke, you picked a good day to come on the show. But really quickly, Luke, before we dive into what's lighting up your tape and what you're watching out there, I know you made some quick appearances on Options Bootcamp and Volatility Views. This is your first time on the Option Block program. So really quick, give our audience a quick overview of your background in the option space and what it is you guys do at Equity Armor, sir.
Sure. I started the SIBO in 1993. I was a DPM specialist for some of the big .com stocks, Oracle, Cisco. After that, I ran the equity derivatives desk for TD Bank, the U.S. equity derivatives desk. Then went to London for them, and then I was the chief investment officer for a London-based hedge fund. And here at Equity Armor, we manage money in a CTA program, trading vol and futures, and we also have 2 mutual funds that have a vol overlay to them. One of them relative value stocks, the other the NASDAQ with our proprietary vol overlay, EA vol.
There you go. Nice and succinct. I always appreciate that. But obviously a lot of volatility on the screen there, sir. I know you've been contributing a lot to NASDAQ in terms of content analysis of VOLQ. We'll get to that in a second as well, but let's kick it off. What is lighting up your tape and what is on your radar over there at Equity Armor today, sir?
Well, just like you said, it's vol, baby. I think I was on maybe 2-3 weeks ago, whatever it was, and we were talking about what's going to happen with the election, what kind of move the markets were implying that they're going to see. And I think it was on the show, but or maybe some other places. And I said, we have to be ready for 1,000-point moves, 2,000-point moves right before the election and maybe after the election, depending on what happens. And we're getting a little bit of that today. There's no stimulus package coming, and corona cases seem to be going up. Europe is going on a lockdown, and people are taking risk off. And, I mean, if you look at where vol was 3-4 days ago, it was pretty low in relation to everything that was coming up. And I've heard some other vol guys say it's hard to push up vol when everyone's kind of hedged and everyone thinks that there's an event happening. Well, I don't know what they're thinking today, but here you go. Apparently it can go up. So that's the thing we're looking at right now. And then we went past the European close, right? There's some books that are flattening out, et cetera, and markets continue to go down. And I think we're going to finish down. The question is, how bad is it going to get, or are we going to get some news on stimulus? But the news on corona is what it is, and Europe is kind of going down and going back to a mini lockdown. So we might have vol bid for a little while.
Yeah, we're starting to see shadows and echoes of that here domestically as well. Things getting shut down again or getting close to it here in and around the Chicagoland area as our numbers are starting to creep up as well. So, yeah, the market can only whistle past the graveyard for so long before it finally has to obviously come to grips with this. We've been saying on the show, Uncle Mike has said on the show many times of late that he thinks the market is pricing in, things beyond the pandemic. The pandemic's kind of in the rearview mirror. Days like today may be a reminder that it is not indeed the case. Let's get into it now. Let's dive into all things VOLQ out there, because a lot's obviously lighting it up out there in NASDAQ volatility land of late. Like I mentioned today, NASDAQ, a rare day where NASDAQ is actually the laggard out here in terms of the major indices. Usually it's leading the charge to the upside or to the downside. But I know, Luke, you and your team over there at Equity Armor have been doing a lot of analysis of all things VOLQ, particularly in some of the more, shall we say, interesting days we've seen of late in October and indeed back in September as well, where we saw days that seemed to flummox the trading crowd out there quite a bit. Days when the index is up and also the volatility product, could be VOLQ, could be VIX, whatever you're looking at, is also up. That always seems to really flummox people. They start deluging us with questions. I know you've done some analysis for this over there at NASDAQ land. What have you determined in your analysis, sir?
Yeah, so I did a LinkedIn post. We talked about what we see in volatility, VOLQ, and what it means when the market is going up or down. And just to summarize it, basically what I was talking about is volatility, you price options, right? And the VOLQ is an index that measures at the money volatility. So you take the price of the call, you take the price of the put. Let's say they're each $5 and it's a $100 stock. The market is thinking that this stock can have a range of $10, right? It's at the money. The VIX is more tail risk. It's more about the skew in the market and people's perception of risk, downside risk. Do they think there's going to be risk further out? And one thing that we've seen, especially this year, is when the market has had big upside moves to the upside, the market is up. Volatility tends to not go down much. After the second day, when the move continues, volatility steadies up, and sometimes volatility goes up, right? And I think sometimes people forget that there's downside volatility and upside volatility. And people that, let's say, for example, sold that straddle that I talked about, $5 on the calls, $5 on the puts, when that $100 stock is trading $115 and that straddle has realized and over-realized, volatility should be up higher. And that's because people are thinking there's going to be a reversion, and also the price of options are realizing. So you sold at a 10, but it really realized 15. Hey, this train might keep going. You got to take the price of those options up. As the price of options go up, the volatility of those options also goes up. Volatility is one of the inputs for pricing an option, and that's what happens. The other interesting thing is when the market goes up and vol goes up and it continues, usually there's a big reversion for the market to come back down. And that's one of the things we were observing. That's why we're saying it's so important just to look at these levels every day, whether the market is doing something or not. Kind of get used to where things are trading. And then when you see a big up move or down move, try to figure out why. Try to see how it fits into your portfolio and what the market is doing.
You're right. It's something that people forget. We joke about that all the time. The people just put volatility in that one bucket, right? They put it in the downside bucket. Okay, there we go. We're moving down. We're selling off. Now there's some vol on the screen. But movement is movement. Movement attributes to volatility at the end of the day, regardless of which direction you're looking at. I can remember quite a few days back on the trading floor where we have some upside crashes, and that certainly amounted to volatility as well. Mr. Rock Lobster, I know you like to spend your days watching the volatility space. Have you been noting these days of late that Luke was just talking about, some of those interesting days where the markets and the volatility products are both moving in the same direction, which are rare, but we have seen a few more of those of late? And then B, what are your thoughts here on what else is lighting up your tape out there in the volatility and indeed the markets today, sir?
I think 2020 might be a good year for that phenomena to be happening. Ever since, I'll say, I don't know, it feels like August was like that with the Qs, where we had all those, that we just had insane upside moves, up 5%, up 7%, up 8%, like crazy, right? So it stands to reason that what I guess Luke was saying, people understanding what actually, vol is just not downside. It's just how much something can move. And that's why the mathematics of vol is kind of fun. And but as of right now, we're finally moving. I think a big part of it was because the election was here, we had that, what I would call like earnings effect, where there's kind of a bubble around a date and the straddle kind of stays the same, but as you get close to expiration, the vol goes up. That's just, that's math as far as vol goes like that, but it adds, we could rally and the vol goes up. So the market's sending a lot of conflicting signals. And right now, I think signal-wise, the market's sending a fairly strong one, like cash over VIX. We're totally backward to all terms. Is usually not great for SPX. We rarely rally. SPX rarely rallies into that term structure. It has to kind of change a little bit just because now the front end of the curve is just exploding in SPX because we're moving. So I think that's not looking great. I don't think we have really priced in extended lockdowns again. I think we had them, at least in the U.S. I don't know if we're going to have the same problems that Europe has. Hopefully not. Hopefully they get over their problems. We'll probably see a lot more mask wearing if people think we're going to get locked down again. Whatever it takes to kind of get through the hump, I guess, on all of that. So, as it stands right now, That's where we are. That actually has real economic effects because the lockdowns are expensive. And when you're trading at near all-time highs in the S&P 500, we weren't pricing in lockdowns, and lockdowns in Europe might spill over here. Asia has handled this much better, right? You could for whatever the amount of reason. So you have one case where, hey, it's working out okay over there. You don't hear a lot about other countries, but Europe is kind of in our grill, so to speak, as far as that's something that could freak people out. So we just have a good old fashioned sell-off with higher vol from an already elevated state due to the earnings effect in the elections. So where do we go? I don't know. Right now, as far as the curve looks, it only looks like south for the SPX, at least for the short term. Can Nancy and Mitch pull a rabbit out of a hat at the end of the day and say, you know what, all this arguing might not be good for us, so maybe we'll just agree on something? So that would give short-term relief, only in as much as maybe the algos kind of kick in. So that's really the only positive I can see, right? We're going to see some earnings. They've been okay, but expectations have been damped down pretty much. So, unless we get some really good news somewhere, and all of a sudden there's willing sellers of vol again, I'm just not seeing that as of right now. So, the market's kind of been slowly trying to make new lows here, at least very short-term lows. So we'll see if that actually can happen. But realistically, it's only a level we were a few weeks ago. So it is the first reaction to what I would say is pretty poor news out of Europe. And then after that, we'll see what happens.
Reminiscent to back in the heady days of February, when it was the breakout in Italy that really got everyone in a tizzy and first started sending markets down into a spiral. Wait a minute, this thing's outside of Wuhan, and hopefully not seeing repeats of that coming anytime soon out there. But you're right, it is interesting to watch how these products are behaving and performing coming into today's markets. As we're seeing this sell-off exacerbate yet again, the Dow's now off over 3%, about 3.15%, S&P about 2.6%, and the NASDAQ off about 2.4%. Uncle Mike, unfortunately, I have to toss to you now on a day that is clearly and decidedly not an Uncle Mike type of day, sir. What is lighting up your tape today, sir?
Well, a few things. I actually took some deltas off on Friday out of fear, so this might be a really good Uncle Mike day, but I'm going to make some decisions towards the end of the day what I want to do. And just for any of you new listeners, I do always say when I'm right or if I'm wrong, but so don't think I'm just trying to be a one-shot pony here, because if I ever do say something that the market's against me, I have very good co-hosts. I mean that as a compliment. They will hold me to it saying, hey, you bonehead, you were wrong.
If only you had kept on those size short deltas you had on a few weeks ago. Man, imagine that, sir.
Yeah, no kidding. Yeah, I actually was a tiny bit negative delta for a couple minutes, and I got a lot of emails on that one real quick. But with this, I'm going to actually be a contrarian right here, and I'm going to say that COVID, this pullback today and COVID have absolutely nothing to do with each other. And I'm going to tell you why I think that. I think it's because of what's going on in the election. Now, here's what happened today. Here's what I am seeing right now. And I think this is just kind of a little microcosm of what's actually happening. Now, first off, does the market want Trump to win? Does the market want Biden to win? I am not going down that road. And I don't want to sound like this. But I know what the market does not want. The market does not want a close election that has uncertainty about who actually won going on and on and on for 2 months after the election. That I can say with certainty that the market does not want. So with this, I read this in USA Today. Now, USA Today is not a Trump newspaper in that it's not something to where I believe they even endorsed Biden, and I don't think they ever endorse anybody. But in USA Today, there was an article out saying that Trump gained on his Democratic challenger, Joe Biden, in 9 of the 12 contested states, meaning Biden's still pounding them in the national polls, but in the Electoral College and the fact that he needs to win certain key states, Trump gained a lot of ground. Now, keep in mind, polls mean this, polls mean that, but the fact that a newspaper that is backing Biden is saying that Trump is gaining a lot of ground on him, that means it might actually be true. And so with that being said, Markets don't want a close race. I do know that, meaning that the markets want a nice, good, clean election to where we have a landslide winner on Tuesday night. And that's that. They don't want lawsuits. They don't want a repeat of Bush Gore 2000. So I believe that, let's say Trump, and who knows if the polls are right. I'm not trying to say whether they are or not. I'm not a political person on this show by any means. But if Trump did indeed gain some ground on Biden, and this becomes a close race, and according to USA Today, in a lot of those states, Biden only leads by 3 percentage points, that's within the margin of error, and that's pretty close to a dead heat in a lot of cases. Now, from what I was reading from that article, I believe that Biden still sounds like he's still in the lead, but Trump gained a lot of ground on him. And I don't think the market likes that. Now, does that mean that the market wants Trump to win? No, I'm not saying that at all. But once again, what I am saying is that the market does not want a close election. The market wants a landslide on Tuesday night. So with that, I believe that it's fear of it being a close election, a contested election, and us having chaos that is driving the market down this large amount today. Not just because of the USA Today article. I mean, there are other posts saying that throughout the weekend as well. But that's kind of what I think is driving this market down. Now, in terms of COVID, do I think it's a factor? Yeah, I think it could be a little bit, but not a lot. And the reason I say that is, yes, cases are up, but the cases have been going up. Do we have some extra news coming out? Yes, about Europe shutting down again. Yes, I think that could be a factor in it. But at some stage, markets did fine through the shutdowns with the fact that we had our big Amazons, we had our Googles, we had things like that. And let's be honest, if we do start coming down after the election, there is going to be some type of a stimulus, I believe anyway, if we do start having a lot of lockdowns and shutdowns. I don't see that happening in the United States in terms of us having major shutdowns again, just because, quite honestly, I don't think at least roughly half of the people in America, I don't think want that. Now, once again, I'm not trying to say whether it's right or wrong. That's up to our listeners to decide, but that's kind of where I'm seeing this happening at this point. Most of the people that get hurt from the shutdown are the travel business, meaning airlines and hotels, and small business. Companies like banks, companies like Amazon, Google, tech companies, things like that, they can survive and they can do well. But the analogy that I've said before is that Portillo's is not on the S&P 500. And if you've never been to Chicago, whenever you go there, go to Portillo's. It's the best burger, beef, whatever. Everything's good there. All right. Mark yells at me for getting a burger at Portillo's, but I've gotten my share of Italian beefs. I've put in old Dick Portillo's kids through college, I'm convinced. But my point is that companies like Portillo's aren't going to have as much money to suffer through a downturn like McDonald's will. And ultimately, McDonald's is going to do better than Portillo's because they're bigger and they have a lot more zeros after their names. That's what companies in the S&P 500 or in the NASDAQ are made of. And so it's going to hurt the small businesses. And the gains that the big businesses will ultimately get, I think, will be good for the market. And that's why I think that the COVID news, while it can be a factor, I don't think it's that much of a factor. I think that what's driving this down is that the market is fearful of a tight presidential race.
You're the only person I know who goes to Portillo's for burgers, sir. I did go check the last time I was there just to make sure. It's like, do they actually have burgers? Yes, they do. It's buried at the bottom corner of the menu there. Uncle Mike goes there for burgers as opposed to all the other things that they are infamous for. But that is a conversation for another day. Let's see what's lighting up our tapes right now on the major indices. As of a few minutes ago, VIX doing some decent paper actually today, which you probably would expect. This is what it takes to really drive and move VIX out of its kind of lethargy of late. It's about 338,000 contracts on the tape. The ADV is a little bit north of 400K, so it looks like it's going to be finally a day north of the ADV out there. Similar story in SPY land. SPY at about 3.1 million. The ADV, 3.8 million out there. The S, 702,000 contracts. The ADV, a little bit under a million, about 977,000 contracts. The Qs, 687,000 contracts. The ADV, a little bit north of a million, 1.04 million. So a little light of NASDAQ land there as well. And the IWM, a.k.a. Russell, already pretty much at their day's worth of volatility and volume. They're at about 500,000 contracts. The ADV, 530. So small caps on fire out there. Let's see what single names are lighting it up out there today. Our top 10 most active options out there. Number 10, Amazon. Cost you $1.59 to break into the top 10. That gets you to Amazon. Number 9, Bank of America. 161,000 contracts. Number 8, American Airlines. 188,000. Then we cross over the 200K level to get to number 7. 200 to 2,000, that gets us to NEO. Number 6, Intel. My old stomping grounds out there, 216,000 contracts. Of course, they're in their post-earnings blush, or should I say maybe malaise out there. Number 5, Microsoft, 268,000 contracts. Then we cross over the 300K threshold. Number 4, AMD, 333,000 contracts. Number 3, Tesla. Wow. It's been a while since we've seen Tesla out of the top 2, 379,000 contracts. That means number 2, what could have bopped Tesla out of the number 2 spot? Well, it's Snap. Wow, 448,000 contracts. That means number 1, you know what it is. It's the big dog. It's the fruit company. Apple, 751,000 contracts. Let's look really quickly. There's a bunch of earnings. I think pretty much all the earnings are popping off this week, listeners. Let's just give you a representative sampling. Today we got Hasbro. Back in the toy sector. Tomorrow we got Pfizer, 3M, Caterpillar, Merck, Microsoft, AMD, and JetBlue. Just a few of the top 10 names out there. Wednesday, UPS, Boeing, our friends across the street here. Six Flags, getting out to the amusement park. Thursday, of course, more of the big dogs. Apple, Amazon, Google, Facebook, most of the FANG. Outside of Netflix is reporting on Thursday. Starbucks, Nokia, WWE, Blizzard, Activision, also on Thursday and Friday. We've got ExxonMobil and Chevron. Let's just look at a couple here really quickly. Again, you can check out all these reports for yourselves completely free of charge, courtesy of our friends over there in Orat's Land, theoptionsinsider.com. Let's go to Microsoft really quickly. Like I said, they're on the 27th. After the bell, they were coming into this report at about $215. They were pricing in $870. In the past, they moved $5.71. So a little rich on the Microsoft front. Boeing, they're on the 28th. Before the bell, they were at $163.86. They were pricing in $4.42. In the past, they moved $4.80. So a little light. Apple, the one you guys are all looking at, $116.87 as of this report. They were pricing in $5.97. In the past, they moved $5.24. So a little bit of extra juice in Apple land. Let's see if the Amazonians are following suit. They were at $3,185 pretty much as of the time of this report. They were pricing in $192, pretty much even. In the past, they've moved $152. So a little bit of extra juice there in some of the big FANG names. We can keep going, but we have to keep rolling with the show. But before we do that, Luke, I know you pay attention to some single names out there as well. What has been lighting up your tape over there at Equity Armor these days, sir?
Well, the thing this morning that really was a surprise to a lot of people in the market, and I think this is what the sell-off, part of the sell-off was SAP Systems out of Germany. SAP is basically the Oracle and partly Cisco and Rackspace of Europe. And these projections and these numbers were, I mean, they were terrible. And I don't know if they're trying to get ready for 2021 and kind of under-promise and over-deliver, but the stock's down 30%. And when you look at a tech name out of Europe, and these are the kind of numbers they're putting out, it really scares other people that are in big tech names are saying, wait a minute, has all these sales happened? Is this thing over? You know, businesses might not be using these things as much, or the projections on it might be too high, because SAP is obviously very business related. It's not social media or not necessarily commerce related. So that was pretty bad, and that I think that's part of the sell-off here, which is one of the big tech names out of Europe just totally getting smashed.
Let's see what else is getting smashed and indeed lighting up our tape today as we head right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird, time to get wild, time to unleash our Eye of Sauron upon the markets and see what it comes back to us with. First off, we're going back to our old friend Ducky Momo. And if you get that reference, you've spent some quality time watching a great show, Phineas and Ferb. Of course, MOMO Inc., ticker symbol MOMO, M-O-M-O, coming into today's show about $15.07. So on the lighter side out there today, off about 1% on the day today. This is the name that's had an interesting trajectory over the course of the past year. A year ago, it was trading, 34, almost $35. It topped out almost 41 right before all this madness kind of kicked off in January into February. And then throughout the madness, it actually only hit about 20 even, which is a decent sell-off, but by no means the low of the year because it kind of hung out of that level, actually rallied a little bit going into April up to about 24 and change before it started selling off again. Got down to about 16 and change in late June, and then it really cratered back in September down to 13 and change. And it's kind of been vacillating in this range ever since. Obviously, in the last few sessions, it's actually trended up a little bit, back up to the 15 handle, but obviously been a rough year out here for good old Ducky Momo. Let's see what our Eye of Sauron found out here today. It found a 2,000 lot, 2,000 even, of the NOV 16 half calls going up for 47 cents. These were lifting the offer at the time, and then we started digging and said, interesting, 2,000 lot kind of round number. Let's see if there's anything else afoot out there to maybe contribute to this. And we saw, actually, there is a lot more on the tape. Coming into showtime here, there was about almost 20,000 of these NOV 16 halves having gone up in a variety of sizes, all the way down to about 400 lots, all the way up to the biggest lot, which is what triggered our Eye of Sauron, that 2,000 lot out there. But we saw a lot of blocks going up throughout the day in various sizes. So a lot of times with those, it's going to make the execution look a little bit different because you're going to have things laying out in the book. The market's going to move, obviously, a little bit on there. So you have to take where it goes up on the bid and offer, sometimes with a grain of salt with these, which is why we do a little bit of extra analysis. One of the things you can do if you're doing this yourself, listeners, is, of course, pay attention to what's going on in the implied vol side of the space. That'll usually give you a good indication as well. And we did see on this one, not only were they lifting offers on a lot of these trades, which is a good sign that they're probably buying these, but also we saw the implied vol continually ticking up throughout the day. They started off around a 60% when these first smaller blocks started going up. By the time our 2,000 lot went up, it was about 62%, and later on in the day got up 64% and even higher. So that's usually another sign that they're gobbling these bad boys up. So Mr. Rock Lobster, let's start there. Our old friend Ducky Momo, I haven't talked about this one in a while. A, is that your takeaway as well? You think they're buying these bad boys? And if so, B, what do you think of about 20,000 of these NOV 16 half? Someone's got to have it. By the way, this does not cover, earnings are on the 24th and expiration is on the 20th. So someone's loading up on this bad boy, but not doing it through the earnings cycle, which is also kind of interesting. Mr. Rock Lobster, what's your take on these ones, sir?
This is an interesting one. I like TOSAW's comments about the race closing. I totally forgot about that. He was right. Like, the race has closed actually quite fast. Maybe, who knows? It could be 1,000 reasons why. But this is clearly, I think, a post-election bounce as a trade. I mean, if you think about it, I don't think it's an unreasonable price to pay, although I'm just looking at I just have tick charts up right now, so that's kind of screwing me up a little bit because I got to get out of some stuff, but I did, so I'm okay. It's hard to trade and do the show at the same time, I've realized.
Welcome to my world. Try hosting as well, sir. It makes it even more fun.
I forgot because I don't want to forget anything. I think it has a shot. So if somebody's just looking for some excuse me, sort of post-election love outside the earnings cycle, because it's a early SEP earnings, so SEP October, November, yeah. So I don't know what they're looking for, but clearly, some kind of surprise outside the earnings cycle.
Certainly seems that way, and they're not even going through the earnings, which you think if you're going to go to all this effort, you might want to get a little bit of that earnings juice as well, but maybe not. Clearly, in this case, not so much. So maybe they're looking for that earnings to keep that decay a little bit at bay throughout the run of this, give them a little bit longer time before this bad boy starts to erode in their face. Either way, sizable block of these Ducky Momo. We'll come back to these because these are pretty near term. We'll see how these bad boys fare. Meanwhile, let's go on out to another name. Isn't as excitingly named, but it's interesting nonetheless. LQDA Technologies Inc. If you're saying to yourself, $15 I don't know. Maybe that's a little bit too rich for my blood. Well, we got you covered here. Liquidia Technology, ticker symbol LQDA, trading $4.47. Now, some, like perhaps our old friend the Viceroy, may argue that is an option unto itself, but not today. We got some options paper to parse out there. Let's look at this name really quickly. A year ago, it was trading $5.11. It looks like this one has the opposite chart, just about all the other names we talked about during this pandemic. Usually they have trended lower and then reversed. This one kind of trended lower ever so briefly, but then it just took off. Let's see, $5.11 is where it was a year ago, so a little bit north. It maxed out at about $7 even right before the pandemic. Sold off to about $3.31, so I had a decent sell-off there. And then it just took off. April is trading $7.30. By June 8th, our favorite day, or close to it, actually a little earlier in June, trading $10.13. And then it topped out at $11.44. Actually hit $12.10 intraday back on June 25th. And then it just turned around again and came right back down. So most names have the crater in the middle, then they turn back around. This one has the apex in the middle, and then it falls right off a cliff again. By, let's see, a couple of sessions ago, it was trading $2.86. And now this one has cratered, so it was trading $5.79 on the 12th. By the 16th, it was trading $2.86, and now it's back up to $4.47. So a lot of volatility out here in Liquidia Technologies, which is perhaps what's attracting the paper we found out here. These are the NOV 2.5 puts, so roughly $2 out of the money puts, going up for a pretty hefty 15 cents, considering they are sizably out of the money at this point and don't have that long to go. They went up 1,106 times, a total of about 4,000 on the day. Another one that went up in some smaller chunks as well. So clearly this strike was attracting some attention out here. If you're curious, that works out to a 228 IV. That's, it's juicy when they can get 15 cents for an option that has a strike of $2 away. And they can still get 15 cents out there. So interesting stuff. Mr. Rock Lobster, A, do you concur that these are line in the sand puts? And if so, B, do you like someone coming out here and selling a 228 vol 4,000 times roughly in Liquidia Technologies, Inc.?
So have we gotten any love from the listeners on the line in the sand put demarcation yet? Have you felt that yet?
Yes, they like it.
I think so. This to me, again, looks like one, even though it's only 15 cents on, a relative price basis, that's actually something in a $2.50 stock. So this is not a name I follow, but 2.5 does look like I'm going to say, yep, it's a 1-year low at least. So it has all the Mr. Line in the Sand or Mrs. Line in the Sand. Maybe we need a picture of them, because I think this Line in the Sand person is pretty good.
I think they look like Volman. They're very deceptively similar to Volman, sir.
Yes, maybe, and they clearly don't have their head in the sand or maybe after they sell the put, they just stick their head in the sand. They don't care because they're like, I'm not doing anything anyway. I'll just take delivery, so I don't care. Which is a perfectly acceptable way to sell puts as long as you know you can pay the piper. It's a lot easier that way. So I think we have another one to be watched. Line in the sand again. After the election, looking for the juice or looking for the lower stock price. So it's right up the alley.
Yeah, a lot of people have referred to the election as an earnings event for the market as a whole, and certainly some of these trades we're seeing today treating it that way, not really trading through the earnings of these names themselves, but actually this case it is. The earnings are on the 9th. I take that back. But for the other one, definitely not. They're just saying, hey, we'll take the earnings bump, or they should say the election bump, and the heck with the earnings themselves. And now it is Monday. It's time to unleash the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. It's Monday. Time to dispense some options, wit, and or wisdom, courtesy of Uncle Mike. Mr. Uncle Mike, sir, not exactly an Uncle Mike type of day. Maybe you can make it up with your wit and or wisdom. What do you have in store for us today, sir?
Well, there's kind of an event coming up in 8 days that I think we need to be prepared for.
You already missed my birthday, so I don't know what else you're talking about.
Shoot. I'm sorry, Mark. I apologize for that. But with November 3rd looming, this is no question an event that can move markets a lot one way or another. So I want to give some ideas that I'm using with clients, and I think people may want to consider going into the election. Now, the first idea, let's say that you have 100% of your assets in IRAs, whether they're Roths or whether they're traditionals or company 401ks, whatever. If you're in that situation, and this is designed to be an oversimplified idea, one thing with which you could do is you can put a significant amount of money in cash for the next week or so. Now, of course, let's talk about the scenarios of what can happen if you went all the cash. If that's the case, if the market stays the same, well, you're the same either way. If the market crashes, then of course you're better off. But then what if the market actually goes up during this time frame? Well, if it does go higher, you're going to get burned and you're going to miss out on some potential upside. And you're going to say, this was stupid. Why did I try and time the market? This is a dumb idea. But the other thing with which you could do is maybe take a small portion of the money that you were going to put in cash and perhaps buy some calls on SPY, on RUT, or whatever index you like to look at, or possibly buy some call spreads if you feel that that's too rich for your blood. Now, how much of it? That's up to the individual investor. But one thing that I can tell you for sure, I can tell you that 4 years ago on election night, I remember watching the S&P futures drop a lot as soon as Trump got elected. Now, of course, we had the rallies afterwards and everything was fine for people who bought and hold, which is fine. But if you're really concerned of this market crashing going into the election and you have money in an IRA, you could sell a significant amount of holdings. There'd be no tax consequence. Now, of course, commissions may be a consequence depending on who your broker is or where your money's at. But that's something with which you'll need to have an understanding of. A lot of places there are no commission costs for selling stocks. But one thing that you could do is just buy some calls or call spreads to say, you know what, I'm fine losing this money I have in the call spreads. It's a very minuscule amount because if we do have something bad happen, then it's not going to hurt me that much. But if we do go up, I probably won't make as much money as I would have, but at least I'll have something on the table. And that's something with which to consider. Now, let's say that you have money outside of an IRA and you have capital gains built into stocks. Well, that strategy really won't work so well because you'll take on a lot of capital gains tax by selling your stocks if your stocks are at a high value. So one thing you may want to consider with that is that you may want to use some type of an index option. Let's say the NDX, for example. Let's say that you have a lot of stocks that are tied to the NASDAQ or the NASDAQ 100 or whatever the case may be, and you're concerned about a big drop in the market. Well, by using options on the NDX, you would have a 60-40 tax treatment, meaning that let's say you just bought a put option and the market went way down and you made money on that put option. Yeah, you'd have to pay tax on it, but 60% of the tax could be long-term gain and 40% could be short-term gain. And that would be the advantage of using an index option outside of an IRA. So with that, what should you use? Should you use puts? Should you use put spreads? That's up to the individual investor and the individual situation. How much of it should you use? Once again, that's up to the individual investor. But I think it's something to consider, not with all your portfolio by any means, but with a portion of your portfolio heading into election night. I think that's something that everyone should at least consider in some way, shape, or form. I personally like spreads in a lot of ways because of the fact that volatility, I believe, is a little bit higher. And the spread offers you the ability to mitigate some of that higher volatility. But if you do feel that you want to buy maybe some options 10-20% below where the market is right now, you'll pay a decent amount of money for them. But if the market does go down that much, you will cash them in, that's for sure, or that you will make a profit on them if it goes down enough. So something to consider, and I would encourage anyone to at least look into that for election night because it's coming pretty soon. And that's my strategy block for today.
What else is coming pretty soon is our Election Night Live special, so make sure you pencil in some time in the after hours. You're tired of all the talking heads on your various cable news outlets breaking down the results. Turn to us. We'll give you a fun one. It's going to kick off probably around 6 p.m. Central and then run from there depending on how much grist there is for the analytical mill on here. Let's see how much grist there is for our question mill as well as we open up a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the mail block. We'll see if we can squeeze a couple of you on here real quick here. Got a couple of related questions, so maybe we'll group them together. Both asking about VOLQ, which is interesting. First off, Ally wants to know, what is the difference between VOLQ and VLQ? Are they different products, different tenures? Please clear up my confusion. And then Tony in our live chat, Tony Weber wants to know, does the VIX follow technical analysis? He says moving averages, support resistance, that sort of thing. I thought I remember you throwing, quote, shade on the concept. Yes, we have done that before. He wants to know, is VOLQ a better leading indicator? So a bit of a fun twofer. Luke, since you're holding down our NASDAQ hot seat, I'll give you pride of place on going for these both first. First off, sounds like Ally a little bit confused between the cash index and the futures tickers. Maybe clear that up for them. And then B, what are your thoughts in general about using technical analysis when it applies to volatility products? And then B, how do you think it applies maybe better, maybe the same? What are your thoughts as to VOLQ, sir? A lot to unpack there. Have at it.
Yeah, I'll try to be quick. First on the VOLQ versus VLQ. Obviously, VOLQ is the NASDAQ 100 Volatility Index, and that measures changes in 30-day implied volatility of the NASDAQ 100. 30-day implied volatility of the NASDAQ 100. VLQ could be anything depending on what you're looking at. I mean, it could be the Vanguard Global Liquidity Factor ETF. That's got a symbol VLQ. Some of the products that trade in Canada have a different symbol that they do in the U.S., but the same product, kind of like ADRs. So if you're looking for VOLQ, that's what it is. The 30-day implied volatility of the NASDAQ, the VLQ, just put in that symbol in the Yahoo Finance into your platform or Bloomberg or whatever you have and look at the description, and that'll tell you what that is. Might be the differential in the futures, but I'm just not sure what they're punching in. So that's that. And as far as the VIX, does VIX follow technical analysis? I also have thrown some shade at technical analysis before. My partners at Equity Armor love technical analysis, so we fight about it, moving averages, support, resistance, all that. Yeah, there are buckets or there are vol regimes that the VIX tends to trade in. Some people think that normalized VIX is somewhere between 16 and 22. And if it breaks those levels, we're looking for a higher VIX or we're looking for lower VIX. Or if it gets below that, it might be a buying signal or something. But if you've looked at volatility, and what the central bank has done, normalized VIX levels might have been pushed a lot lower. And they might have traded there for a long time, like we've seen for the last 7, 8 years, 9 years. So, yeah, you can try to use it, but what the VIX really does is it's looking at the skew, and it's a fear gauge. It's a gauge of how fearful people are or how concerned they are about upcoming events or future events. The calculation of the VIX is a little too complicated to get into right now, but basically you look at out of the money puts in the S&P and you say, hey, if there are a lot of buyers in that, the VIX is probably going up. Or if there's a lot of uncertainty in the market, the VIX is probably going up, and you can kind of use it that way. But support resistance like commodities tend to trade just because VIX is a futures product, VIX futures. I'm not sure if I really believe in that.
Yeah, it's not been our favorite use case either. Really quickly, some people have hit us up before on this VLQ versus VOLQ thing. You're right, there are tickers in the stock world that are VLQ as well. And then if you go over to the CME platform, which is where the VOLQ futures are trading, it's kind of like, think about it, listeners, like the VIX cash index. Type in VIX into your browser of choice, it's going to give you a quote. Then the VIX futures on there are, of course, going to have different symbols because they're different months, different expirations, all that stuff. It's something analogous over there with what's going up on CME. You're going to type in VLQ to get the actual futures, then a month, let's say Z for DEES. So you want the DEES VOLQ future. It's going to be VLQ and then Z. Don't make me get into all the nuances of futures options and futures symbology. We'll be here for days. But that's kind of the difference. You go over to their platform when you're trading it, actually. So if you want to just get the VOLQ cash index that's disseminated, you can type in VOLQ anywhere and get that quote pretty much. If you want to go over, actually trade the futures on CME, that's going to be the underlying. But don't let that confuse you. If you type in VOLQ over there, that platform, it'll still get you to the right page. And of course, you can go over to NASDAQ, NASDAQ.com/VOLQ. It has all that info there as well. So sometimes people get hung up if they're just solely in the equity space and they type a ticker and it gives them some equity ticker symbol that may have the same exact ticker, whereas they don't know what's going on the future side of the front, which, of course, this is a volatility futures product at the end of the day. And hopefully sometime by early 2021, we'll have some options go in there as well. Well done, Mr. Luke. Now we got to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're watching until the next time we can gather here together on Thursday. We'll start with you, Mr. Rock Lobster. If you have any thoughts to share on the use case or perhaps lack thereof for technical analysis and volatility products in particular, have at it. And then B, what else are you keeping an eye on for the rest of this week until Thursday, sir?
Let's see. Okay, well, I'll say this about the technical analysis of vol. I think vol has like trends, ranges, momentum, stuff like that. So I think it's significant when it breaks a quartile. So if that's technical analysis, I use that. Anytime it breaks out of a quartile, it's usually a huge change in sentiment. So I think it makes a decent trade setup for certain types of trades. So to be honest, I actually don't know what technical analysis is. I've never done it. When I was a floor trader, I just read the tape. If it looked like it was going up, I get long. If it looked like it's going down, I get short, or just lean that way. I never thought too much about looking at a chart. So clearly, I'm not the one to speak about that as far as a technical analysis of vol. Although I do think it does, it makes an interesting trade at levels because just of the nature of volatility, I think is, as we just heard before. So anyway, so that's what I will chime in on as far as that.
And what are you watching the rest of the week, sir?
We just made a short-term peak with the vol futures. I mean, in this cycle, to Nove, at least I'm looking at higher prices and the market's pulled back. So let's see who's right. How much bad news can the market handle? Can it handle more COVID and a closer race and earnings of all the big tech come in 2 days or something, 3 days? So we have like bang, bang, bang. That could be enough as a recipe for vol. So normally, again, like another goofball rule I have, it usually takes 3 pieces of bad macro news to really push the VIX higher. I think as of today, I'll give TOSAW the credit for 1. I think the Europe thing's not good. That's 2. If we have crappy earnings, that could be 3. So that could be a catalyst to maybe shoot us into the higher 30s prior to the election. So that's what I'm looking at to see if this bad stuff gets worse. That's it.
Speaking of getting worse, the sell-off right now, not exactly getting worse. Looks like it's kind of maybe taking a bit of a break. S&P back off around 2.5%. NASDAQ, or I should say the Dow, back below 3%, almost there, 2.95%. And the NASDAQ off about 2.33%. So kind of back to where we started the show pretty much here, which is kind of interesting. Mr. Uncle Mike, sir, what are you watching for the rest of this week until we can gather here together on Thursday?
Well, watching the S&P, I think, like I said earlier in my opening segment, I think the presidential election is the big news right now. COVID or no COVID, stimulus or no stimulus, the election is what's going to determine the future fate of not necessarily COVID, because the virus could care less who's the president, but it will determine how it's handled, and the election is going to determine stimulus. And we also have a new Supreme Court nominee going, so there's a lot going on, but it all goes back to the election, in my opinion.
And last but not least, Mr. Luke, sir, what are you keeping an eye on for the rest of this week?
Keep an eye on a couple of things. I'm definitely looking at VOLQ. I'm looking at those levels. I want to see if they stay here or if they go higher, because as volatility gets higher, obviously the decay in those options has got to go up. If the price of that at-the-money straddle stays the same, which is basically what the VOLQ is, right? People are anticipating some sort of move, and pretty soon it doesn't have anything to do with volatility. It's just that they think market's going to move, let's say, 1,000 points one way or another. And the volatility on those options might continue to go up, but the price might stay the same. So again, the price of the straddle might stay the same, but the volatility might be going up. I'm looking at that. Obviously, I'm going to take a look at levels, some of the other vol indicators like VIX and VIX futures months, And then let's see what tomorrow brings. If there's a rip rally all the way back, I don't expect vol to go down that much, depending on how the news is. But I expect volatility until election and maybe a little bit after election if it's close or if it's contested or not or whatever. But this volatility, as we said 3-4 weeks ago when I was on, shouldn't really be surprising us that much.
And that music shouldn't surprise you either. It means we've come to the end of our hour-long sojourn here. And you mentioned rip rallies. Who knows? The way this market's been of late, we could see a rip rally later today and close unched on the day. Who knows? But we won't know on this show. If you want more, though, listeners, stay tuned. We'll be back in about exactly an hour to break down all the good stuff going on in the realm of crypto derivatives with the folks over there at Open, OPYN, breaking down all the cool stuff going on in that super hot DeFi space out there. If you want to know more about that, I know a lot of you do. Tune in about exactly an hour. Hit next on your podcast device of choice. You can tune right into that one as well. But before we go, let's go back around the horn. Let's start with you, Mr. Luke, as our guest, sir. If folks want to check out what you're cooking up over there in Equity Armor Land, where should they go? What should they do?
Yeah, they should come over to our website, equityarmorinvestments.com. Check out either one of our funds. If you're a qualified investor, we can show you our CTA program. And we're on social media, on LinkedIn, on Twitter. And one thing I just got to say I appreciate about the show is you're talking to real traders all the time, not CFAs or practitioners. Look at what some of those guys have done in volatility in the last year with the blow-ups you've had at some of the big firms. Won't mention any names, but it's good to hear other traders talk about the market rather than concepts and conceptual thinking. So well, there it is.
We appreciate that, Luke. And of course, if you want to learn more about VOLQ, and judging by your questions, sounds like a lot of you do, you know where to go, NASDAQ.com/VOLQ, VOLQ. Say the VLQ, that's the ticker for when you're trading it over there on CME land. And Mr. Uncle Mike, sir, if folks are intrigued, maybe they want someone to hold their hand on a crazy dark red day like today, where should they go? What should they do?
stcharleswealth.com. Find my contact information there. Would love to have a conversation with anybody. And I'm one of the few financial advisors in the world that understands volatility and how you can actually use options on this stuff.
There you go. Check them out, stcharleswealth.com. And last but not least, if you want to learn more about Volman and all the other fun stuff he has cooking over there, his newsletter and everything else, where should they go? What should they do, Mr. Rock Lobster?
Surf on over to optionpit.com. Look at, we have our new Robinhood product, which is pretty cool. Looking at daily momentum and certain names. Also, then look at using some of our proprietary stuff to find a high risk reward option. So for those of you interested in that kind of momentum trade, Mark is doing a webinar tomorrow. Go to optionpit.com and sign up. And just go to our memberships for all the goodies. And put your vol trading on.
There you go. Put your vol trading on. You can begin that journey over there at optionpit.com. And on behalf of the rockingest of lobsters and the uncleest of Mikes and Mr. Luke and our friends over there at NASDAQ, and indeed myself, what do they submit? Oh, yeah, the options overlord. I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for listening live, all the fun stuff that you do. Remember, if you like what you hear, keep those reviews coming in your platform of choice. It really does keep new folks discovering the shows in these troubled times. And we'll see you back here later today for the Crypto Rundown. Back here tomorrow for a return of the Advisor's Option and all sorts of other fun stuff. Education Wednesday, of course, OPR and Boot Camp back on the docket all the way through to Thursday. And another episode of the Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.